Imagine it's the year 2000. You're walking into a Samsung factory in South Korea. The machines are humming. The engineers are brilliant. The future looks bright. Fast forward to 2025. That same company now has 4 massive factories in Vietnam, generating $62.5 billion in revenue every single year. That is roughly 25% of Vietnam's entire GDP coming from a single foreign company. Think about that for a second. One corporation is responsible for a quarter of an entire nation's economic output. But here is the twist that nobody saw coming. Samsung didn't leave China because China stopped being useful. Samsung left China because China became too dangerous. And Vietnam, a country that was dirt poor just 30 years ago, is now playing the most sophisticated geopolitical chess game on the planet. They are outsmarting both superpowers and turning themselves into the new workshop of the world in the process. Today, we are going to break down exactly how a developing nation with a population smaller than Japan is systematically stealing the manufacturing crown from the factory floor of Asia and building an economic fortress that even Washington and Beijing can't ignore. Buckle up. Because the story of Vietnam's rise is not just about economics. It is about survival, strategy, and a level of diplomatic cunning that would make Machiavelli blush. Let's talk about the elephant in the room first. No one is saying China is finished. That would be absurd. China is still the world's second largest economy. It still manufactures roughly 30% of the world's goods. But here's what has changed. The boardrooms of Apple, Samsung, Intel, and 1,000 other corporations are now terrified of something that didn't matter 10 years ago, a single point of failure. Think about it. If you are running a global supply chain and every critical component comes from one country, what happens when that country decides to go to war? What happens when the government locks everyone down for 3 years like they did during COVID? What happens when trade wars explode and tariffs make everything prohibitively expensive overnight? This is no longer a theoretical risk. It happened. In 2020, when China went into lockdown, the entire world felt the pain. Factories shut down, shipping containers piled up at ports, companies couldn't get semiconductors. The supply chains that the world had spent decades optimizing for cost were revealed to be catastrophically fragile. The message was clear. Do not put all your eggs in the Chinese basket. Enter the strategy that every boardroom is now obsessed with. China plus one. The idea is simple but brilliant. Keep your core manufacturing in China because it is still the most efficient. But diversify your risk by opening a second factory, a second supply chain, a second country that can produce the same goods if China becomes unavailable. Vietnam became the obvious choice. But here is where Vietnam didn't just get lucky. Vietnam actively outsmarted everyone else trying to claim the crown. They positioned themselves as the perfect hedge, close enough to China's supply chains to tap into the infrastructure. Far enough away to avoid getting dragged into conflict, cheap enough to matter, stable enough to trust. And the results speak for themselves. Vietnam's GDP grew by 7.52% in the first half of 2025. That is the fastest growth the country has seen in 15 years. Meanwhile, China's growth continues to sputter and stall, hitting a mere 4.7% in 2024 and facing structural headwinds that cannot be fixed with stimulus or propaganda. The gap is closing. Vietnam is climbing. And the world is watching. Now, if you think China plus one is just some abstract strategy that exists on PowerPoint slides in corporate offices, let me show you the real-world numbers. Let's start with Samsung. Samsung is not some startup. It is one of the largest technology companies in the world. They manufacture everything from smartphones to semiconductors to televisions. And in 2025, Samsung has over $20 billion invested in Vietnam. That is not a pilot program. That is not a test run. That is a full-scale industrial commitment. In 2024, Samsung's 4 factories in Vietnam generated $62.5 billion in revenue. Let me contextualize that for you. That is roughly 25% of Vietnam's entire GDP coming from a single foreign company in a single country. To put it another way, if Samsung pulled out tomorrow, Vietnam's economy would crater by a quarter. That is how dependent Vietnam has become. But Samsung isn't even the biggest story. Apple is. As of 2023, Apple had 27 suppliers operating in Vietnam. By 2025, that number has jumped to 35. That is a 40% increase in just 2 years. And the production volume is staggering. By 2025, it is estimated that Vietnam will produce 65% of all Apple AirPods globally. 65%. Think about how many AirPods are sold every single day. Millions. Vietnam is making almost all of them. On top of that, Vietnam will produce 20% of all iPads and 20% of all Apple Watches. These are not low-margin commodity products. These are the premium goods that Apple uses to maintain its profit margins. And they are moving to Vietnam. But wait, there's more. Intel, the company that literally invented the modern microchip, has established its largest chip assembly and testing facility in the entire world in Ho Chi Minh City. Think about that. Not in California, not in Taiwan, not in South Korea. In Ho Chi Minh City, a city that was literally carpet bombed just 50 years ago. This facility has processed over 3.9 billion semiconductor units to date. It is a colossal industrial engine running at full capacity. These are not coincidences. These are not random business decisions. This is a coordinated exodus. The most sophisticated technology companies in the world are all making the same calculation. China is too risky. Vietnam is the answer, and Vietnam is ready. Now here is where the story gets really interesting. Vietnam did not just get lucky with low wages and geography. Vietnam actively outsmarted the global trading system. While China faces crushing tariffs from the United States, Vietnam has what you might call a clean trade status. The US currently slaps heavy 301 tariffs on Chinese goods. These are not small taxes. These are prohibitive duties that can add 50% or more to the cost of a product. It makes Chinese-made goods uncompetitive in the American market. But Vietnamese-made goods face no such penalties. The tariff differential alone is enough to make manufacturing in Vietnam more profitable than manufacturing in China, even if Vietnamese wages were significantly higher. But Vietnam did not stop there. Vietnam has also positioned itself as the world's premier free trade player. Vietnam is a member of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, the CPTPP. This is the massive Pacific trade bloc that includes Japan, Australia, Canada, and dozens of other wealthy nations. China is not in the CPTPP. China cannot join the CPTPP because the agreement includes clauses that demand labor standards and environmental regulations that China refuses to accept. So Vietnam gets access to a market of over 2 billion consumers under preferential trade terms. Meanwhile, China has to negotiate bilateral deals one at a time. But it gets even better. Vietnam also signed the European Union-Vietnam Free Trade Agreement, the EVFTA. This agreement will eventually eliminate 99% of all tariffs between Vietnam and Europe. 99%. That means Vietnamese manufacturers can sell goods to Europe at virtually no tariff penalty. European consumers will choose Vietnamese goods over Chinese goods, not because they are better, but because they are significantly cheaper due to the tariff advantage. This is the trade cheat code. Vietnam has positioned itself as the gateway between Asia and the wealthy markets of the West. Goods flow in from China and the region, get assembled or finished in Vietnam, slapped with a Made in Vietnam label, and flow out to the world with minimal tariffs. Some critics call this transshipment. Some call it tariff arbitrage. I call it brilliance. The Chinese government is starting to crack down on this practice, particularly when goods are clearly being finished in Vietnam just for the label. But the system is already built. The factories are already there. The supply chains are already locked in. Vietnam has effectively become the tariff arbitrage capital of the world. And every day, more and more manufacturing capacity moves into the country. Okay? So Vietnam has the geopolitical positioning and the trade deals locked down. But you cannot build an industrial powerhouse without cheap labor. And this is where demographics is destiny. In 2025, Vietnam's average manufacturing labor costs are approximately 50% lower than China's. A factory worker in Vietnam earns between $250 and $400 a month. That is roughly 40 to 65,000 dong per month. In China's industrial coastal cities, the same worker earns over $700 to $800 a month. That salary gap is massive when you are running a factory with thousands of workers. A $200 increase in labor costs per employee per month adds up to millions of dollars per year. But here is the thing that China cannot fix. China is aging. China's population is shrinking. The one-child policy, now reversed, was too late. The demographic pyramid is inverted. China has more elderly people than young people. In 25 years, China's workforce will have shrunk by hundreds of millions. Vietnam, by contrast, has a median age of around 32. That is young, that is hungry. That is a massive generation of young people entering the workforce just as global supply chains are desperately looking for hands to fill factory slots. Vietnam has a youth dividend. It has 20 years of prime working age population growth ahead of it before it faces the same demographic cliff that China is now experiencing. For any multinational trying to plan a manufacturing strategy over the next 2 decades, that demographic math is irresistible. You want to build a factory that will still be productive in 2045? Build it in Vietnam. In China, you are not even sure the workers will be there. Now, Vietnam is not content to be the world's assembly line forever. The country has massive ambitions. Vietnam is launching a national strategy to train 50,000 semiconductor engineers by 2030. That is not a small number. That is an army. The strategy is to move from simple assembly, where Vietnam takes pre-manufactured chips and puts them into packages, to high-value chip design, where Vietnamese engineers actually design the chips themselves. This would be a civilization-level leap. It would move Vietnam from a low-margin manufacturer to a high-margin technology innovator. And it is not just government talk. NVIDIA, arguably the most important technology company in the world right now, CEO Jensen Huang, recently visited Vietnam and called it a second home. He announced plans to set up a base to develop Vietnam's AI and semiconductor ecosystem. That is not a courtesy visit. That is a commitment. NVIDIA is betting real money on Vietnam's ability to become a semiconductor hub. When Jensen Huang makes a bet, the world follows. If NVIDIA is in Vietnam, then TSMC, Samsung, and 100 other semiconductor companies will follow. Vietnam is positioning itself to capture not just the assembly of semiconductors, but the design, the testing, the research. It is a master plan that could take decades to fully execute, but the foundation is being laid right now. Here is where Vietnam's true genius reveals itself. Vietnam is one of the few countries on Earth that has what is called a comprehensive strategic partnership with both the United States and China. That is not an accident. That is a masterclass in strategic ambiguity. Vietnam is not choosing a side. Vietnam is making both sides dependent on Vietnam. Think about what that means. The United States wants to contain China and needs Vietnam as a manufacturing hub and a geopolitical ally in Southeast Asia. China needs Vietnam as a buffer and a source of trade and investment. Vietnam is essentially saying, I am essential to both of you, so both of you will invest in me. Both of you will upgrade my infrastructure. Both of you will keep your tariffs low on my goods. Both of you will protect my interests. This is bamboo diplomacy. The bamboo tree bends in the wind but never breaks. It survives by being flexible, not by being rigid. Vietnam is playing the role of the flexible nation that everyone wants to work with, because being on Vietnam's bad side means losing access to a critical supply chain or critical geopolitical partner. It is ruthless strategy disguised as neutrality. Now, before you declare Vietnam the inevitable winner of the new manufacturing wars, we need to talk about the cracks in the foundation. Vietnam is becoming a victim of its own success. In late 2024 and early 2025, northern Vietnam faced serious power shortages. Factories, including Foxconn, one of Apple's largest suppliers, had to briefly dim lights or stop production. This is Vietnam's Achilles heel. The country's energy infrastructure was built for a nation of 100 million people doing light manufacturing. It was not built for the sudden explosion of heavy industrial capacity that has arrived over the past 5 years. Vietnam is scrambling to build new power plants, but infrastructure takes time. In the meantime, every brownout is a risk. Every power shortage is a reminder that Vietnam's infrastructure is still developing. But the energy crisis is not the worst problem. Rising costs are. Industrial rent in Ho Chi Minh City has spiked to $4.10 per square meter per month. That is now actually higher than some Chinese cities like Dongguan or Chengdu. Vietnam is becoming victims of their own success. The very factors that attracted factories, cheap land, and cheap labor are disappearing. Factory owners are starting to whisper about the next Vietnam. Maybe it is Cambodia. Maybe it is Indonesia. Maybe it is the Philippines. The cycle might be repeating itself. Vietnam might have bought itself 20 to 30 years at the top of the manufacturing pyramid. But nothing lasts forever. The country is not guaranteed to hold its position. It has to keep innovating, keep improving, keep staying ahead of the next competitor. The window is open, but windows close, and Vietnam knows it. That is why the semiconductor master plan is so critical. Vietnam needs to move up the value chain before the next country steals its manufacturing crown the way it stole China's. So here we are in 2025. A country that was considered a basket case just 30 years ago is now outsmarting the two superpowers, balancing on a geopolitical tightrope between Washington and Beijing, building semiconductor dreams while managing power grids straining at the seams. Vietnam's rise is not inevitable. It is a bet. It is a strategy. It is a country running as fast as it can and hoping the chair is still there when it tries to sit down. The question is not whether Vietnam has already won. The question is whether it can stay one step ahead of the competition while the world watches and waits. If you found this deep dive into Vietnam's outsmarting strategy valuable, smash that like button. It tells the algorithm that people actually care about Southeast Asian economics. And subscribe if you want to understand which nation is going to be the manufacturing hub when Vietnam's time is up. I want to hear from you in the comments. Do you think Vietnam can actually move into high-value semiconductor design? Or will it always be an assembly nation playing second fiddle to the real innovators? Let me know what you think. Thanks for watching, and I'll see you in the next one.